Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis.
We understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver.
A hawkish Fed leaves rates unchanged for a 7th straight month, but long bond yields jump as investors question Fed Chair Walsh's inflation-fighting resolve. South Korean stocks rebound after Samsung's earnings beat Spark's bargain hunting. Officials are pledging new steps to curb leveraged ETF trading and stabilise markets. Oil steadies after a strong rally as the United States launches fresh strikes against Iran, escalating tensions across the Middle East. A 2-year US tariff grace period for imported generic drugs starts on August the 1st. Dr. Reddy, CEO, joins us to discuss why shifting production stateside could take far longer. Asian stocks are finding their feet as tech earnings lift the mood. Microsoft's cloud unit grew at the fastest pace in 4 years, while Samsung chip profits and Advantest's outlook both beat. Uncertainty, though, over the Fed's rate path is prompting a sell-off in long-end bonds, even as traders push back bets on a hike to later in the year. Avril Hong's in Singapore with a look at markets. Avril.
Yeah, Paul, we're seeing the Asia stock selling taking a bit of a breather today. Some of these tech names actually managed to clock strong gains, and this is on the back of these tech earnings helping to lift the mood. We had Microsoft, the cloud unit, growing at the fastest pace in 4 years, showing how it's making headway with customers on AI, computing services, and that's helping Nasdaq futures to rebound following on from the index entering technical correction overnight. And of course, we had Samsung earnings as well. Chip profits 250-fold surge, and it also sees robust demand in the back half for memory. You had Advantest, it surged about 12% in Tokyo trade at one point after its outlook beat. So overall, it does seem like investor concerns about massive AI capital expenditure not translating into huge enough profits, that seems to be easing just a little bit. But given these massive swings in the market, especially in South Korea, and the forced leveraging, the specter of that we've been seeing of late, dip buyers, I think, have to be quite brave. Now, I'll flip the board because, as you highlighted, when it comes to the Federal Reserve, of course, it left rates unchanged, and this is despite 3 dissenters calling for a hike. And of course, Kevin Walsh has been drawing criticism for his bare bones communications, and investors don't seem terribly convinced of how determined he is to fight inflation. We saw traders pushing back their bets of a Fed hike to later in the year. That could cap some of these gains we're seeing in the dollar. In terms of the G10s, is looking quite flat in the APEC. The Korean won is reversing some of yesterday's rally. You could be seeing some of those month-end quirks. Now flip the board again, because where we really saw investors not convinced about Kevin Walsh's inflation fight story was in the long end, and we saw how the 30-year yield spiked to the highest level since 2007. It's worth noting that we did see the selling in the long end coinciding with an extension of the declines in momentum names in stocks. So maybe some of that cross-asset correlation is coming back in. But when it comes to the inflation fight, it does seem like bond markets are doing some of the tightening for the Fed. Paul, that being said, when it comes to if inflation accelerates, this could easily backfire if investors deem the Fed as being behind the curve.
All right, thanks very much, Avril. Let's get some more on the Fed now with Garfield Reynolds, who leads our Markets Live Asia coverage. Garfield, Avril alluding to there, maybe the market left with more questions than answers after today's press conference. I mean, to what degree is the market answering those questions in a vacuum?
Well, it's an interesting setup because on the one hand, Chairman Walsh made some comments about leaving it up to the market to try and work these things out. And you can argue that what's gone on with bond yields jumping, that's doing potentially some of the Fed's job for it. Certainly, 30-year yields up at as much as 5.2%. That's going to help to cool down activity. Remember, mortgage rates in the US are very directly tied to 30-year bond rates. So that's going to get consumers to potentially pull their heads in. But at the same time, the volatility is a major problem, and especially when you have had signs that global central banks and some other buy and hold investors have been a bit reluctant on treasuries. Having this sort of volatility, and this is one of the most extraordinary moves for 30-year yields out of a Fed meeting. Usually it's 2s to 5s that move a lot on the Fed. To have 30s move, that's got to be a worry for investors. And yeah, there's a feeling that Walsh could readily have given the same announcement, even some of the same tone, but at least given more of an explanation of the thinking. Like, yes, we're committed on inflation, but there are signs that it's starting to roll over. There were several Fed speakers who had said they were willing to wait and see on inflation because they weren't fully worried that it was going to get out of control. There were only 3 dissents. So he could have given more of the reasoning, but it seems like he didn't want to leave any hostages to fortune, people to say, oh, okay, so that if X happens, that means we can price in a hike or a hold. So that is going to create plenty of volatility. It may be that volatility fades once the market has had more opportunities to get a better feel for how the Walsh Fed is going to operate. But at the moment, it's pretty radically different from how previous Fed chairs acted, how they spoke. And so I think we might have a few more volatile Fed meetings, and we might see different parts of the curve breaking up or down in response to those.
So where does this leave us in terms of market pricing for tightening later this year? Because there's only 3 meetings left. One of them's right before the midterms, but we're going to hear from a bunch of Fed speakers in the next few days. Could we potentially learn a bit more here?
Yes, we'll learn a bit more, and we'll also have, we get PCE inflation at the end of this week. That's going to have some impact because that is at least still officially the measure that the Fed looks at, even though Fed Walsh wants to look at some others. We've also got jobs coming up next week, and then we've got the next round of data, and looking forward to the Jackson Hole meeting at the end of next month. So there's a lot of information coming the bond market's way. There's also the major question of just what goes on with the war. That's brought crude way back up this month and has sent fuel prices higher, fuel futures particularly high. All of that argues for the idea that inflation is not going away anytime soon. So in that context, it's hard to see how the Fed avoids hiking. And if that's the case, then the longer it waits to hike, the more the market is going to stress about them getting behind the curve.
All right, Garfield Reynolds there, who leads our Markets Live Asia coverage. Let's get some more analysis now with our next guest. Mahjabeen Zaman is head of FX research at ANZ. And Mahjabeen, as Garfield was outlining there, just so many variables at the moment, so many unknowns, and not really a lot of clues there from the Fed Chair Walsh either. So given that, what's your expectations around September for that Fed meeting and the rest of the year?
Yeah, look, I think that's a good question. But I think, before the September meeting, we've got 2 jobs data, 2 inflation numbers. It gives the Fed time to incorporate the findings of the task force as well. But overall, we do expect, with the data that we have seen so far, that the Fed will likely be on hold into the rest of the year. Pretty much bring in an extended hold because the data seems to be all making sense. The PCE that's coming up on the back of the softer PPI and CPI looks to be very much in line now, approaching the Fed's forecast if we look at that deeper.
Well, the inflation data that we're going to get on Thursday US time, it's for June. It's kind of old. How useful is this data looking backwards, and what should the Fed be using to make its decisions?
Yeah, look, I think when you look at the inflation numbers, it all comes back to how growth is looking, how job market is looking, more so the growth and the consumption data. That's quite important, and how it's looking relative to the rest of the world. Look, I think the US has held up pretty well. You could argue some of that is coming from the wealth creation out of the, massive risk rally in equity markets, perhaps. Household income has increased, and that's fueling consumption. But I think that's the data that we need to watch. Of course, if there is a little bit of a nervousness around the risk asset side of things in the US market, the AI boom, I think there will be a little bit of volatility coming back on the consumption side. But for now, surely we don't see any hikes on the page. We probably will expect to see some cuts later down the road if the consumption story picks up again.
Yeah, I mean, one of the big variables here, and Garfield mentioned this as well, is what's going to happen with the US-Iran war, with the oil price as well. And I mean, it's not hard to imagine a scenario where there is a resolution, the oil price suddenly drops. Under those circumstances, does the decision to hold look like the prudent one?
Yeah, possibly. And I think it's also a function of how high oil prices feed into different economies. We have to remember that the U.S. is a net energy exporter. At the margin, they are benefiting from the exports that they have been pushing through on the back of, releases from the SPR and the rest, and the exports of revenue, exports of commodities, helping their revenue side of things vis-a-vis other, economies which are importers, which are struggling more from these higher energy prices.
Well, we saw a big drop in the US dollar after that decision. What's the direction of travel for the greenback from here?
Yeah, look, I think in the near term, we think the dollar will be marginally supported. I think that's a function of, as you mentioned, the war is on. There's a little bit of safe haven demand there at the margin. There's also a little bit of correlation with high oil prices, which kind of is dollar supportive. And of course, if the equity markets continue to do what they're doing, again, that's leading into a little bit of support there. So broadly, we see in the near term, dollar being supported. Having said that, over the medium to long term, we do think that it all rests on how the Fed goes. We do expect cuts to come in next year, the data to look to be softer, and I think that should see some weakness. And of course, not forgetting the fact that 2025 was a year of U.S. policy uncertainty with the midterms coming up. We're going to see that again, and that will likely weigh on the dollar.
Yeah, the Fed's not the only central bank, getting questioned at the moment about its commitment around inflation. I mean, we've got the BOJ coming up tomorrow. So what's your view on the Bank of Japan's, really gradual, very incremental approach to tightening? When do you see the next move? It's probably not tomorrow. And when that next move comes, is it too late?
Yeah, great question. I think as of now, we are expecting a hold this week at the Bank of Japan meeting. You are right. They have been moving very slowly, very gradually. And, of course, looking at the inflation numbers, they're also now moving up, but also at a pretty slow pace. Now, one thing to note here is that we expect the next rate hike from the BOJ to be in October. But more so at this meeting, what we will be really looking out for is the guidance, the forward guidance, the signaling. Are we going to get a super hawkish BOJ or not? I think that's really what we need to shift the needle on the yen, because the yen is now obviously at its multi-decade weakness.
Is it realistic to hope for a super hawkish BOJ considering recent history? And I want to throw another wild card in here too. We've got the government planning a consumption tax cut on food. How do you see that altering the picture?
Yeah, that's not new news. I feel like the consumption tax cut has been topical over a period of time. How they fund that is questionable. But, I think at the end of the day, there will be a push and pull on the fiscal side of things. And that's, again, not a new story for Japan. It's been there for quite some time. I think the bigger story is what are the tools they have to arrest the weakness in the yen, right? So, of course, one is raising rates aggressively. So they have to be super hawkish to increase, market expectations of a, higher terminal rate, let's say 1.5%. That instead of 1.2 right now, which the current market is expecting. That could help. The other thing is, of course, intervention. We know that hasn't been very successful so far, especially in the face of a rising dollar, which we have seen in the last few weeks. And obviously, there have been headlines around changes in allocations at the Japanese pension fund sort of story. And I think that is sort of going to take, that is a long gradual path, if that comes into play, to bring funds back and repatriation flows back, and how that will impact the yen. I think it's a wait and see story.
Yeah, in terms of when the next rate hike comes, it's not really a question of if, but is that tightening already priced in with the yen? Or where's the floor here?
Yeah, look, I think, we are now at about that 164 mark. I think it's going to be hard to see the yen strengthen very significantly on the back of multiple things. We can't forget at the same time that higher oil prices are also impacting the yen with high imported inflation, which is weighing on the yen itself. The terms of trade, the negative terms of trade shock is a problem, and I think that also has to kind of retreat. So I think there are 3 or 4 factors that we need to strengthen the yen, and they all need to go hand in hand, which is a tough call. One is the hawkish BOJ. Second, you need to have reduced volatility around the fiscal story, which we just spoke about, lower energy prices, and also a weaker USD to bring it back to previous levels.
All right, Mahjabeen Zaman, the head of FX research at ANZ. Thank you so much for your time today. Still ahead on Insight, Samsung's shares swinging as investors digest a better than expected quarterly earnings report. We'll take a closer look at the outlook next. This is Bloomberg. Welcome back. You're watching Insights. Here's a roundup of the latest US tech earnings. Meta shares fell in extended trading after a disappointing revenue forecast for the current quarter. It expects sales to come in between $61 and $64 billion, the midline missing the average analyst estimate of $63.2 billion. ARM Holdings also slid in late trade after pointing to sluggishness in the smartphone industry. Royalties from handset makers account for much of the company's revenue. On the other hand, Microsoft shares climbed better than expected. Fourth quarter earnings helped by continued strength in cloud computing and artificial intelligence. Bloomberg tech anchor Ed Ludlow reports from San Francisco.
Microsoft delivered what investors wanted to hear on 2 different fronts: AI growth and some clarity around AI spending. Azure, the cloud computing unit, grew 43% in the quarter. That's its fastest pace since 2022, well ahead of expectations. And we got a figure for Azure annual revenue topping $100 billion for the first time. They looked as well outside of financials. So think about how are the AI products doing? Microsoft said that 365 Copilot now has more than 30 million paid seats, up from 20 million 3 months ago in the March quarter. A beat on the top line, a beat on the bottom line. But the clarity on spending bit, on a quarterly basis, capital expenditures, $41 billion. That represents a jump of 70% year on year. An accounting nuance. Microsoft lowered its calendar 2026 CapEx expectations to $175 billion from about $190 billion, but stressed this does not represent a lower investment. It stems from extending the useful life of data centers and office buildings from 15 years to 25 years. And what that does is it shifts more future data center leases from finance leases to operating leases. Essentially, net, the spending and investment expectation that Microsoft has is exactly the same. Nevertheless, that communication was really cheered by investors in the after hour. Also, perhaps the strongest signal on the AI future spending, Microsoft disclosed $130 billion of new data center leases and commitments during the quarter, and that brings the total future lease commitment for Microsoft to $329 billion. A year ago, it was just shy of $200 billion. Bottom line, Microsoft's message wasn't that it's spending less on AI, it's that AI demand remains strong. Azure is accelerating, and despite what are accounting changes, that lowers a reported CapEx figure, the underlying infrastructure build-out continues at pace. This is Ed Ludlow for Bloomberg News in San Francisco.
Meanwhile, we're keeping an eye on Samsung shares after the company's semiconductor arm reported a more than 250-fold jump in profit. For more, let's get to Asia Equities reporter Winnie Su. So, Winnie, Samsung having a better day than SK Hynix did when it announced similarly blowout results. Give us some of the key takeaways. What were the highlights for Samsung?
Yeah, the results were actually quite mixed, although more on the positive side of things, especially when you compare to how SK Hynix missed earnings estimate yesterday. Today, in fact, Samsung showed a beat, especially in its chip unit, coming at operating income of 89.2 trillion won versus a 79.3 trillion won of an estimate. Now, that is a positive, and some other positive factors were coming through from the earnings call. Overall, how executives are still quite positive about how this memory crunch likely going to continue for longer, and that they have signed these long-term contracts to ensure that they will have a sustainable flow going ahead. But the downside of things, or the flip side, is still in the capex spending. We are still seeing those jump in capex numbers, especially for the chip unit. Now, overall, when you look at the businesses, the positive things are really more in the HBMs, in the storage, and the foundry businesses, while we continue to see the company to struggle with its mobile and its network businesses. So we'll have to see those profitability to pick up. That's why today you're seeing big swings in the stock, up and down 5%, so swinging up among that range. And this is already coming after how the stock has been under pressure, losing more than 30% so far this month, headed for its worst month since 1997.
You want to talk about big swings and volatility. I mean, the Kospi as a whole has been quite extraordinary. We've had the sidecar activated or trading hold on more days than not in the past month. So the government's now taking measures to sort of settle things down, stabilize the market, change some rules around ETFs as well. Can you summarize for us what's happening there, and is it going to work?
Yeah, exactly. So we had that emergency meeting last night among the regulators, including the Finance Ministry and also Bank of Korea. Now, they come in because they needed to find some ways to stabilize the market volatility and to curb these investments of retail investors into the leverage ETFs. So the two key things that they came up with is, one, that they are going to set the exposure to the set share of the investors' portfolio in terms of how much exposure they can get from these leverage ETFs. And then the second thing is to raise these trading costs. While these are coming through yesterday, this is already on top of how they are pausing these new listing of leverage ETFs, and also starting tomorrow, they are going to have a higher minimum deposit amount for investors looking to invest in these leverage ETFs. So that will be very key to how the markets can potentially see lower volatility going forward.
Winnie, just quickly, we've got the Kospi off about 50%. It's from its June peak. Where are the dip buyers?
Yeah, exactly. So unfortunately, and very interestingly, usually when you see such a drawdown, it would be such an attractive timing for dip buyers to step in. But when we talk to these long-only fund managers who don't really usually look at volatility as much, the likes of Eastspring, Fidelity, Robeco, and even Pictet Asset Management, telling us that they are still staying on the sidelines because of the extreme volatility. Even Fidelity telling us that they are keeping their trading sizes smaller and having bigger safety margin so that they can navigate through this volatility. But the good thing is that we are seeing valuations at record low levels, and the likes of JP Morgan and Goldman Sachs both saying that we are seeing this deleveraging process to come to an end. So that might be some opportunities for dip buyers to start looking at the market.
Mm-hmm. All right, Asia Equities reporter Winnie Su, thank you. Still to come, we're going to speak with the CEO of Indian drug maker Dr. Reddy's about the latest Trump tariff threats and production problems with their generic anti-obesity medication. Erez Israeli is going to join us live next. This is Bloomberg.
Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. I asked for a good family fight and I got one. I heard a lot of commonality on the questions, Were there different leans on the answers? You bet there was. In the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic.
Warsh was a little bit more dovish than people expected, which is why you're seeing a rally on the 2-year. And the long bond doesn't like it. The long bond doesn't like that they're not fighting inflation.
I'm going to be looking for, eventually in the next speech by Waller, because that's going to give us a sense of what did the core of the committee actually, what is he thinking?
And I also think many people on the board are leaning towards a rate hike as well. We've already gotten a lot of indication of that, and so I do think we do get rate hikes in September. I actually think today would have been better.
The market reaction speaks very clearly that now we need to talk about what is the credibility of the committee, because it cannot only be talk, you will eventually have to follow through, and that's why the probability, given this market reaction now, has gone up quite significantly that they will have to move at the next meeting.
Well, you heard there from the Federal Reserve Chairman, Kevin Warsh, as well as some of our guests reacting to the central bank's decision to hold rates steady. Now let's take a look at where markets stand. We've got mainland Chinese markets heading off to lunch, Japan coming back online, and a lot of uncertainty really around some of those remarks from Kevin Warsh. I mean, a lot of commentators wondering about the Fed's commitments to fighting inflation. We did see big moves in the 30-year yield, moving above 5.2% for the first time since 2007. A 9-3 vote there. Some dissents in terms of whether or not to hike rates, but the Fed's staying on hold. There's just 3 meetings left this year now. Got the 2-year yield, meanwhile, at 4.2788. Now, a number of other interesting things going on. We've got the Hang Seng Index off by about 0.25%. One stock we're watching there is Innolight, making its trading debut. This is a business that makes optical transceivers essential to the data center build-out. Yeah, it's losing ground. That's off about 15%. Not great timing, just as concerns mount over spending and valuations of AI-related stock. However, on that note, Samsung Electronics gaining 1.2% or 1% now, having a pretty reasonable day after it announced earnings. Second quarter net income beating estimates across the full set of metrics, though it was a bit more of a mixed picture there. We got the broader Kospi index, however, losing ground again, although not as dramatically as we've become accustomed to, off by 0.4%. The Nikkei up by 0.5%. Now we've got to talk about crude prices as well, because that problem hasn't gone away. Brent crude right now, 89.46, is losing a little bit of ground, even though we've had confirmation that the US has been conducting strikes again, and US crude inventories have fallen to their lowest since 2018. Now let's look ahead to the Indian Open. Meanwhile, we've got a whole lot more earnings being reported today, among them Tata Steel, Bajaj Finance, Hyundai Motor as well. Nifty on Wednesday had its best gain in 6+ weeks. It was software, consumer staples leading the way. HFDC Bank also had a pretty good day as well, but we're keeping an eye on the rupee, 95.58, as there's some concerns about the direction of travel for the oil price. We have plenty more ahead. This is Bloomberg. Welcome back. You're watching Insight. We're just 2 days away from the beginning of a 2-year US tariff grace period for imported generic drugs. President Trump's goal is apparently to push manufacturers to bring production back to the US before tariffs rise to 100% in 2028 and 200% in 2029. But the generic drug industry runs on thin margins and brittle supply chains. New facilities must be built, approved by regulators, and then brought up to scale. So the question now is whether drug makers can meet the deadline to move manufacturing stateside before that tariff wall goes up. Well, joining us now is Erez Israeli, CEO of Dr. Reddy's Laboratories, which is one of India's largest drug makers and a major supplier of generic medicines to the United States. Erez, thanks so much for your time today. And I just outlined there the magnitude of the challenge in front of you. I mean, is it even feasible to move manufacturing to the US within that 10-year window? Is it something you're looking at doing? Are you constrained in any way?
Yeah, we are definitely, it is very important for us to be in the United States. It's very important also to serve the United States. We are absolutely more than open to mixing in the United States, to move 30 billion units to the United States while finding a place, building a place, moving products, getting USFDA approval. This is not feasible in 2 years. It is a much larger project. And this is before even considering the cost associated with it, the type of customers, etc.
So if it's not feasible within 2 years, how are you viewing that 2-year window? Is it an opportunity for some dialogue, some lobbying? Perhaps you would look at buying some time. Are these some of the options you're considering?
Yeah, we've been in this situation a year ago. At the time, it was considered obviously lower rate of tariff, but it was essentially the same. And there was reason why it was got exempt. We are talking about a lot of units. The understanding that was there that if tariff will be there, it will just increase the cost of the product, not necessarily do what it was supposed to do, and this is moving things to the United States. It has to be with a dialogue. It has to be with a certain agreement. Naturally, there is a lot of appreciation, the need of the United States to have operation in the United States, so I fully appreciate that. At the same time, it has to be realistic in terms of time and investment.
Yeah, well, also U.S. trade policy has been somewhat difficult to predict, and President Trump's term ends at the end of 2028. So is that something that's in the back of your mind, that perhaps the entire environment could change again within the time frame?
There is a lot of volatility. The politics is one of them, but you have also other considerations. We are manufacturing primarily off-patent products. So every year we are releasing to the market 30 to 40 new products, which at that point of time are the largest, if you wish, pool of business for us. And when you are considering that, the product of 2028 are not necessarily the product of 2026 and not the product of 2032. So there is essentially a lot of planning involved, supply chain and customers and cost, etc. So it is pretty complex environment.
Do you imagine that complexity and the uncertainty around tariffs, as well as some of the supply chain challenges you talk about, can you see that resulting in some more industry consolidation?
I don't think that it will necessarily come to that. I think it comes to that there should be certain products or lines that essentially needs to be localized. By the way, many countries want for either because of their national security considerations or because of proximity to the customer to have certain lines in the proximity to the country or in the country. And there are places that it's much better to do it in the best location, what you call center of excellence, that can make for everybody. That kind of things will eventually come to some sort of agreement. I don't envision consolidation.
In terms of supply chain, China also remains the dominant supplier of many of the raw ingredients for pharmaceuticals. I know there's a desire for diversification to happen, but is it happening, or is it just a lot of talk about diversification at the moment?
Yeah, so India became very dominant in that area as well. Right now, the level of dependency on one country of another is not as big as it used to be. You do have it in certain areas like penicillins or other type of products, but in general, it is now mostly in India and China. So and you do have alternatives as it's related to dependency. So what you have is a desire to work together, but not too dependent on each other. That is a trend since the COVID time, and that's likely to continue.
I'm wondering if you can update us about your semaglutide obesity drug. It did hit a production roadblock. How's it progressing now? When do you expect to see the production and supply resume?
Yeah, we have an issue with our scale-up of the product, and we believe that we are solving it. So we are supposed to be back in the market in the beginning of November.
So also, there's a lot of interest in these sorts of therapies as well. As those US patents roll off, how crowded, how aggressive is it going to be to fight for market share in that anti-obesity segment?
Yeah, this is a kind of a product that many companies want to have, like to have. So it's going to be an ultra competitive with probably more than 20 players that will try to get market share. It's going to be tough, which is going to the ability to have economy of scale, cost, quality, and great relationship with the customers.
We need to talk about your earnings as well, which were out last week, I believe. Can you talk to us about some of the factors that impacted that? Because we did see a bit of a drop in net profit for you.
Yes, we are obviously our earnings were impacted by the semaglutide issue that you just spoke about, but in general, what we see is that outside of the end of the agreement that we had on generic Revlimid, without this product, we are growing double-digit with all of our markets, and once we get back on track on semaglutide, we should see a very, very healthy Q3 and Q4 for us.
Have you had any difficulties with the weakness of the Indian currency? Has that had an impact on your bottom line?
For us, as an exporter, it has a positive impact because obviously our cost is in rupees and our sales is mostly in US dollars and euros. So for us, it is positive. Obviously, it is important that the Indian economy will be strong for the health of everybody that is in India, including us. But let's say short term, it's a positive for us.
Just finally, can you tell us about what you see being your key driver for revenues in 2027? Which therapeutic areas are offering the biggest opportunities for growth?
So primarily anti-cancer and obviously the semaglutide, which is the diabetic and obesity. In general, we are going to launch 27 products in the United States. We already launched 6, and as well as in the other parts of the world. So we do see US, Europe, emerging market are a very important drivers for growth this year.
All right, Erez Israeli, thank you so much for your time today. Erez Israeli is CEO of Dr. Reddy's Laboratories. Now, during our conversation, we did have the Open in India, been up and running for about 90 seconds now. Let's take a look at how things are tracking. Right now, we do have the Nifty index, the IT index, having another very good day, pushing higher by 1%. For the Nifty 50, meanwhile, it saw its best gain in 6 weeks on Wednesday. Software, consumer staples leading the way. India being something of a beneficiary away from in that rotation away from AI. Although that said, India's software stocks having another good day. The Nifty IT index, the best performing right now. Keeping an eye on the rupee, a little changed at the moment, as is the oil price, despite the US conducting fresh strikes on Iran. Now, we're also keeping an eye on Adani stocks after the group flagship Adani Enterprises posted a net loss in the June quarter. That loss stemming primarily from exceptional charges linked to the resolution of US sanctions investigations. Our senior conglomerates reporter PR Sanjay joins us now from Mumbai. So Sanjay, what's the primary takeaway from this quarter's headline results for Adani?
Thank you, Paul. I think the first thing is on an operation perspective, EBITDA perspective, Adani Enterprises, which is an incubating company for the Adani Group flagship, it's still strong. But the Q1 slipped into red primarily because of the one-time charges where they settled with OFAC with $275 million to settle the US cases, and they've separately paid $18 million to drop the DOJ case and other civil and criminal case. So the final orders they are awaiting, but largely towards this one-time charges, Adani Enterprises have slipped into red for Q1, and the global energy volatility has also impacted the mining operations. That has also was a drag to the results, and thirdly, the coal trading volume is also dampener, and depreciation and interest cost, etc., has also adversely impacted Q1 of Adani Enterprises, which is a flagship of Adani conglomerate.
All right, well, let's look ahead. What are the key catalysts, operational milestones that investors should be tracking for the next few quarters?
So this is one quarter where the company witnessed starting of international operations for Navi Mumbai International Airport that will have an impact on incoming quarter, and they also started the toll for the Ganga Expressway at road projects, big road projects, and solar module capacity was also in the line, and they've also kickstarted the data center business that is also going to affect, and most importantly, the copper manufacturing capacity was around 52%, which is giving a positive signs for the street. State is watching what next for that. So primarily road projects, airport projects, data center projects, and the manufacturing, which is coming under Adani New Industries Limited, are all firing from all cylinders. So which will have a positive impact in coming quarters. That is what the street is keenly watching.
Can you also give us an update on how some of these incubator initiatives are performing? What traction are they getting so far?
So it's a great question, and almost all incubating business, which can be airport, which is roadways, which is data centers, which is green hydrogen manufacturing facility, it's all started. And from 2026 to 2031, they're expecting at least 5 IPOs from the conglomerate stable, which would include airports, which would include data centers, which would include metal and mining. And so they are waiting for these incubated businesses to be independent, that can be spun off, and that can be a different listed company, like in the past, like what happened for ports and other listed companies. Now they have total 10 listed companies. They're expecting 5 more in next 5 years.
All right, Bloomberg senior reporter for conglomerates there, PR Sanjay in Mumbai. Thank you. In other news, the lower house of India's parliament has approved tougher penalties for leaks of competitive exam papers. And this follows a wave of student protests that posed one of the biggest political challenges in years for Prime Minister Narendra Modi. For more, let's get to Bloomberg's South Asia economy editor, Rishi Bhatia, joining us now from New Delhi. So, Rishi, tougher penalties now regarding exam leaks. Can you give us the details on the new laws?
So yes, the lower house of India's parliament yesterday approved harsher penalties and harsher prison sentence for those who've been involved in paper leaks. And remember, this is coming in the aftermath of the student protests that we saw that rocked the country over the last a few weeks. Having said that, the idea behind this bill is, of course, to restore the confidence in India's education system and of course, coming in after Prime Minister Modi himself assured that the government will look at stricter ways of ensuring that no such paper leaks happen. Having said that, despite a law that governed paper leaks, even in the past we did see the medical entrance exam test, the paper there also, getting leaked. So how will this bill really change things is something that one has to wait and watch out for.
So is this enough to satisfy and appease the students and also the cockroach Junta party, or are they emboldened by this? Got some momentum now? Is there some other demand that they're now looking at?
There is definitely momentum on ground as far as the Cockroach Janata Party is concerned. One of their demands, of course, was the resignation of the education minister, which has already been satisfied by the government. But the second demand was that there should be no police action against the peaceful protesters. But that is something where the problem now really lies. In fact, the issue, even rocked the parliament yesterday with the leader of the opposition, Rahul Gandhi, asking and raising questions as to who really ordered, police action and the use of tear gas and batons on the protesters. In the protests that happened in the national capital, and those issues will continue to, be in the public sphere over the next few days as well.
All right, Bloomberg South Asia economy editor Ruchi Bhatia there in New Delhi. Let's get to some of the other stories that we're following. Soldiers and emergency crews are continuing the search for earthquake survivors in sweltering weather in southwestern Japan. The 7.1 magnitude quake on Tuesday killed at least 18 people, with another 62 injured. At least 3 died in a suspected gas explosion at an Aeon shopping mall, while another 5 were killed when a paper mill chimney collapsed. Prime Minister Sanae Takaichi has pledged full support for rescue and relief efforts. Oil edged higher as the US launched a new wave of strikes against Iran in response to attacks on military bases in the Middle East. The two sides had paused renewed hostilities a week ago to further diplomatic talks. That lull, though, ended yesterday when Iran's Islamic Revolutionary Guard Corps carried out a surprise assault, firing ballistic missiles at a US military base in Jordan. Qatar has sent its first LNG shipment through the Strait of Hormuz since one of its tankers was attacked earlier this month. Ship tracking data show the Al Arish transited the key waterway before heading for Pakistan after weeks of idling in the Persian Gulf. The voyage suggests Qatar Energy is resuming shipments through Hormuz after pausing voyages when a gas carrier was struck on July 7. The Pentagon has awarded major defense contracts worth billions of dollars as the Trump administration works to boost weapons stockpiles drained by the Iran war. Lockheed Martin won a $59 billion deal to sharply expand Patriot missile production. General Dynamics and Huntington Ingalls secured contracts worth close to $76 billion for nuclear submarines and upgrading shipyard infrastructure. All right, on that subject, let's take a look at the oil price. We've got Brent crude, a little bit softer at the moment, $89.60 a barrel, and that is despite that rising tension in the Gulf. The US conducting those fresh strikes. As I mentioned, US crude inventories have also fallen to their lowest since 2018. Now, before we go, let's take a quick look at tomorrow's show. We'll be speaking exclusively with Levi Strauss CEO Michelle Goss about the clothing maker's Asia business outlook and growth targets. Also, Natixis chief APAC economist Alicia Garcia-Herrero is going to join us as the Bank of Japan makes its rate decision. That is it, though, for Inside Horizons Middle East and Africa is up next. Keep it here with us. This is Bloomberg.